Hey traders, Nick here looking at Virgin Galactic SPCE. I don't remember doing a public video on that. I've done a few for the members, so let's see how this goes. I'm expecting big fans for the stock. I'm expecting some passion. I encourage you to comment. Just keep it civil. I don't mind opposing opinions. Let's just be civil. And like the video if you do like it, or unlike it if you hate it, and subscribe to the channel. It's free so far. All right, here we go. So it's down on its luck. It's down 1.5% today, but the market was down 1.8%, so it's not its fault today. However, you can see it's in a descending channel. I like sci-fi. I love space travel. We will be doing it as a species. We need to. So this is basically the only way to trade the transportation for a business into space. There are other companies doing some stuff, but this is the one that actually can take you up there, and it's already public. So clearly the guy knows what he's doing in starting businesses. Don't know if he's going to follow through with that one, but I'm a fan, and I will give them credit. And betting on it up here was lunacy for my taste. I would never chase a stock going into a prior failure. The reason why I'm doing this video is I was discussing just now, minutes ago, 5:15 Pacific, so 8 o'clock, past 8 on the East Coast. So somebody has a credit put spread, and they were deciding whether they should cut it loose or not. So I thought I'd share the comments with everyone. So going into a prior massive fail, I don't care how much I love a stock, I should hold back. I'll give you a perfect example. A firm, it was down here somewhere. I shared a long, and then it took off. I said, okay, so I'm done with my long. I'm not re-engaging long because it's going into very, let's call them not so obvious entry points. The dip here, somebody trying to catch it, made sense. The price action here technically makes sense. And now what also makes sense is that it's fallen into, for the same reason I hated it up here, I like it down here because of these ticks. Now there are levels lower up here, but they're so far back that they're probably not coming into play, except that they were confirmed here. And there are lower levels even past that, but I think this is the tick we were talking about. So the May correction was pretty harsh system-wide. All stocks were falling. This one bottomed violently. So this candle here on earnings was pretty large, and the low was here. It opened here and it closed at the very top. It took it 2 or 3 or 4 days to get out and take off. I don't know if there was a headline. Was that the time when they went to space? I'm not sure. Regardless, here we are back into it. So the absolute low of this day was somewhere in the 1450s. The couple of days after that are probably more relevant to the trade here. So today's low, they rejected it to a degree. So let's get granular. Okay, so this is a 15-minute chart. It shows you how it's been doing relatively recently, and it's pretty systemic. You can almost smell it. Okay, so let's see how. I gave them direction as to what I would do tomorrow. So if I had a trade and it was pretty. They have a couple of weeks for it to expire, so they're not like it's not expiring this week. So this is the price action in the stock, right? And so here are a few things that I learned. First of all, whenever there is a descending sell-off like this, I don't assume they're going to snap out of it until they stop making lower lows. And in this case, they haven't. So let's say I assume that they're going to hold this floor. They haven't been able to. They held it a little bit and then they failed. It looks like highly on over the long term, right? So this is short-term action, luckily. So at some point, they will snap out of this. Whenever they hit a buyable bottom in the eyes of the gods of stocks. So here are the lines to watch for that to happen next day, tomorrow. What's today? Today is the last day of November. So December 1 and 2. This should be resolved by then. So by that I mean you either know that this was a bottom and it's snapping out or not. So that's what I mean by resolved. And I also know that this was the prior fail. So now I have lines. Ideally, and I also know that there are resistance lines at almost every level up there. I'll try to eyeball them for us right there. All right, so let's see how this could play out. Let's say tomorrow it does this and it does that. What I want to see is, first of all, yes, no lower lows. So constructive would be great, but it could dip to here. Definitely do not lose here, because if you lose here, whatever is going on is going to continue going on. And then you want to see it come here. So I want to see what happens here, what happens here, what happens here, and then eventually it will pinch and then decide to break out, repeat at the higher level of resistance. But that's fine. Step one is stop making lows. So this must absolutely continue. So if I were to call something quits, it would be at this point right there, X. If I were to see progress, it would be holding this on a dip. Coming back, failing, that's fine. Come back at some point, you're going to break out. So either here, here, or here. Do not lose this. And if you do, most definitely do not lose that. I would stop out. There is support at 15 and at 1450. The 1450 is that big candle over there. If that's failing, I wouldn't want to know what's below here. I remember the last one time I went long, I sold puts at $10. That's how much people hated it. And now they loved it, and now they hate it again. So it's almost like counterintuitive trade. I want to be long it for the long term. That's probably the easiest way to play the stock, and I don't want to go in all in at the same time. So these are comments to help somebody figure out if they should bail on a losing trade or not. They still have 40 cents to save out of it. They sold the put spread, and now it has gone against them, but it could go worse, and they only need a small pop to get better. So if this happens, they're all good, and they have a decent chance of getting out with no damage, even with a profit. So these are comments to help them. So if I'm long, these are not comments to add to my long. These are comments to see how I manage my long. If I wanted to get long, my general comment is it's falling into big time support from May and from prior. I just showed you. So it makes sense to nibble long. It doesn't make sense to go all in, because as attractive as this level looks, it has to trade within the prism of the stock market. So if the S&P falls, nothing is going to hold regardless of how good of a level it is. So that's why I say not all in. So I don't want to end up averaging down. How do I avoid that? There's difference between averaging down and averaging in. So what's the difference? If I usually take 100 shares and I take all 100 at once, and then the stock falls 5 or 10% and I add more, I average down. I don't like that. It just makes the problem bigger. Easy for me to say. Averaging in is different. If I usually take 100 shares, I take half now, or 1/3, or 2/3, whatever. I take and I leave some on the side, and then the stock falls, and then I take the rest. That's called averaging in. I'm a fan of that, rather than take a full position and then decide, oh, okay, I've got a problem on my hand. Shoot, let me double it. This makes no sense. Averaging down that way. Averaging in makes a lot of sense, especially when markets are at all-time highs. Hopefully these comments help you out. The idea is, once you establish no more lower lows, you start building higher lows, and then eventually lower highs is fine until you come to a point, and then you eventually start building a recovery path. So then that would be a proper bottom. I don't like bottoms that are like this. They make no sense. So a bottom that goes down, finds footing, and then starts to go back up. That's what happens. You find footing, and then you start going back up. So then it's not necessarily a rounding bottom, but a bottom that actually is consolidated to establish a base of sorts that you can count on. Otherwise, these, just mess you up. You get in at the wrong time, you get out at the wrong time. It just, unless you're super perfect with your charts, a lot of room for error. Signing out.